this is a bullish scenario. We have this rejection, and again, the first thing is we need to check whether this is actually a good rejection or if it is a trap. All right, so let's go through the checklist again. First thing, is the market rotating? Look at this. Up and down, up and down, up and down. Yes, the market is rotating. Is the rejection strong? Yeah, this is beautiful low. This is a strong low. Let me delete that so you can see it better, right? Strong low. So, all good so far. Are the volumes distributed well? We have clear volume cluster in here. Below that, low volume zone. So yeah, volumes are distributed well. Is there a fair value gap? Well, in this case, I would prefer the fair value gap to be somewhere in here, right above this heavy volume zone. We do have fair value gap, but it is a little bit higher. Let me mark that for you. This bullish fair value gap beginning in here, but I prefer if it actually was beginning in here at the beginning of the volume cluster. In this case, it's not so clear cut, but if we go through the checklist, then market is rotating, rejection is strong, volumes are distributed well, but the fair value gap is above the place where I would like to trade. It's not above the heavy volume zone, so in this case, I would look at it like this, because the fair value gap is there, but it's a bit higher, right? So if I wanted to be strict, the checklist would look like this, but still 3 conditions are met, which means this is a still good trade to take, right? So how to trade this? Mark the beginning of the heavy volume zone, and you can use a limit order there. Just place the limit order, wait for the pullback, and when the price hits that level, hits your limit order, then go long from there. Now, I haven't mentioned stop loss and take profit yet, and in this case it's very simple. Let's start with a stop loss, which is, at least for me, always at the bottom of the rejection. Right here, this is the stop loss, because the price really shouldn't go past that point. If it does, then the low is breached and there's no telling where the price could go from there, right? So this is the stop loss. And regarding the take profit, you want to trade with at least risk reward ratio 1 or better, which means that in this case the take profit would be somewhere in here. But in my trading, I strive to have a bigger risk reward ratio than 1. So in the long run, I try to have around 1.5, which in this case would be somewhere in here. But what I do is I look at volume distribution and decide on the take profit placement based on the volumes. But